Joining us right now to get ahead of it is Andersen Capital Management Chief Investment Officer Peter Andersen. Peter, great to see you. Thanks very much. We are expecting inflation to come way down, certainly versus what we saw a year ago when we were all the way up at peak levels of 9.1%. What's priced into the market, and how do you want to look at the second half of the year in terms of the macro story and investing today?
Well, Maria, as these hikes finally season, and by that I mean as they get at least 1 year old, the stakes are just getting higher and higher with each economic report. So this report that's coming out this morning is going to reflect 3 of the 10 hikes being a year old. And so if we see some good results from only 3 hikes, just think of what it will be, say, 5 more hikes from now. So I think if the news is good, I'm a little worried that it shouldn't be too good because we still have 7 hikes coming down the pike that are less than a year old. Yeah. And it takes usually about a year for this to work through. Well, so with that in mind, I am actually taking a little bit of a time out, as they call it, simply because I put up such good numbers in the first half of this year. I'm waiting a bit. I have about a high cash balance, the highest I've had in years, frankly, about 15% in cash. And I'm waiting to see the results of the Fed and also the early earnings that are coming in from, say, the tech companies to see how we all get a sense of where we are, especially with artificial intelligence right now.
Yeah, I'm glad you mentioned earnings because that is where we're focused on as well this morning. We'll start to get those earnings on Thursday of this week, and then the major banks released on Friday. But as far as looking at these rate hikes, Adam Johnson, jump in here because we've already seen 10 rate hikes. Yeah. And, Peter's making the point that we haven't even felt the brunt of this. So, sure, we want inflation to continue coming down. But how severe is the Fed willing to go to slow this economy down?
Honestly, I can't believe the Fed's even talking about another rate hike. And I tell you why, Maria. At 8:30, we're going to get CPI today. It's expected 3.1%. It peaked at 9.7, so it's come down from 9.7 to 3.1. And by the way, the Fed's long-term goal is 2. We're practically there. As Peter says, they've already raised rates, 10 or 11 times, so just let it breathe. That's what I wish they'd do, but they're not doing
that. Was it 9.7 or 9.1? I know we all went all the way up to 9.1%.
Yeah, I believe it went 9.7.
But 9.7, yeah. Wow. You're right. It does take about a year for the impact of these higher rates to take effect. Peter, we've already seen mortgage rates above 7% most recently. That's crushing housing. What areas do you want to invest in? Are they interest rate sensitive, given the move in rates, or do you want to look at growth, which, of course, has seen incredible moves in the first half of the year?
Well, I have never been able to predict the path of interest rates, so I try to stay away from interest-sensitive areas. And I'll tell you, certain technologies really don't care about the path of interest rates. I suffered last year holding tech names like NVIDIA, for instance, because the narrative was higher rates kill technology or growth stocks. And as we've seen, that was short-lived, Maria. This year, the same companies that took it on the chin are champions this year. So staying away from interest rate sensitive stocks has always been my motto. And I'm still very optimistic about artificial intelligence, especially companies like NVIDIA, of course, the poster child. However, I want to put a little bit of a warning in there. I think we've gotten a little bit ahead of ourselves with the enthusiasm about how much AI is going to be the savior of the world.
Well, what about,
and I do think that
What about the regulatory environment? They're even talking about new regulations on AI. You've got Bank of America ordered to pay $250 million for allegedly engaging in deceptive practices that hurt hundreds of thousands of its customers with fees. The Consumer Financial Protection Bureau states, quote, the bank charged multiple $35 overdraft fees for the same transaction. It failed to properly issue rewards to credit card users and signed up customers for card accounts without their consent. Peter, this is just the Consumer Protection Bureau. We're expecting a whole host of new rulemaking coming out of the SEC, coming out on the banks, from the bank regulator. What is that going to do to this market?
Well, if I could just blend that together, Maria. So if regulatory action is going to be taken against something as abstract and as complicated as artificial intelligence, we better be very careful, because even the experts don't really have a handle on artificial intelligence. So the fact that we would try to regulate it and enact policies from people that do not have, for instance, PhDs in computer science and electrical engineering and all the other things that come into play with artificial intelligence, it will be very, very difficult. You can see already, as you mentioned, with the Bank of America, I mean, that's fairly simple technology, so to speak, in terms of the fraud that they found. And even that is rather difficult to detect. So can you imagine taking on something that's much more heady than that?
Real quick before you go, any upside surprises we could see from second quarter earnings?
Absolutely. I think that in spite of the fact that I said that there's caution about artificial intelligence, and I'm hoping that every company from A to Z doesn't mention AI in their earnings calls, because I think that's a little bit oversold. But technology companies like NVIDIA, Supermicro Computer, Schrodinger, all of these companies, I am very excited about the future for them, especially once we get beyond the interest rate hike discussion. I think these things have blue skies ahead of them.
Peter, great to see you this morning. Thanks so much.
You're welcome.
Peter Andersen joining us. Quick break.